for the first time today, welcome to the show. And for our regulars, welcome back. It's great to have Greg here filling in for Tom, but I'm going to go ahead and start right away with our market update, what's going on currently. All right, and as you can see, we're on a nice run. Every one of these candle glance charts are on their way up. You can see all of the markets continuing their rising trend that started yesterday. The only thing you can see going down is the VIX. Not a surprise. This is sort of a measurement of fear. Not a surprise to see it dropping, currently reading just under 20 at 19.23. Gold gapped down and tried to make a resurgence there, but it's back testing intraday lows. Currently GLD reading at 125.62. Energy is the best sector right now as far as the big movers, and we can see a nice breakout here intraday, continuing to make new intraday highs. And in particular, the best industry group within that sector is the oil services, so or oil exploration services. So you can see that breakout, not a surprise, very similar situation to what's going on with XLE. But
12 headed top right there. Yeah.
Yes. And there you heard it. Greg, welcome to the show again as my co-host, filling in for Tom Boley. It's been great having you here this week. And gosh, it's going to be over after tomorrow.
Yeah, well, as we threatened yesterday, I'm going to have a new show on the Stock Charts TV, so that'll be good. There's been some very funny names proposed so far, so in the comments at the end of today's show, if you guys have a good name for it, we'd appreciate it, because they want me to come up with one, and I haven't. But anyway, we're looking forward to a really impressive show today. We got Bruce Fraser. Bruce, are you with us?
Oh,
he's coming.
We talked to him earlier, so we know he is here.
I'm here. Sorry.
So we've got Bruce Fraser, and he's going to cover off Wyckoff. And for all the Wyckofians out there, as you know, it's all about building bases and then letting a stock release above the base and then building distribution tops. Bruce does a fantastic job of covering this off. It's an art and really underappreciated art, because one of the things in that whole analysis is recognizing how it's building and how it's working its way out of it. So we look forward to a great presentation. He's got 3 hours of material. We've given him 20 minutes. So
that's exactly right. And I see how you're trying. I see how you're trying to avoid the discussion about hockey, Greg. Don't think that passed me by, but the Ducks, I'm really excited. The Ducks actually clinched a playoff position last night, so really excited about that. It's been quite the fight in the Pacific Division and Western Conference, so hip, hip, hooray for the Ducks.
It's been playoffs for like 4 months in hockey since January.
It's been fantastic. Again, all of you, I know you get tired of me talking hockey, but if you haven't checked out that game, you really should. Talk about exciting. Certainly an exciting sport to watch, just like watching the market can be a pretty exciting sport. But here we go. What's going on this week? Well, tomorrow, Greg has graciously stepped in for me and is going to do a workshop on Keltner channels. So that'll be very interesting. Tuesday, we have everything stock charts. Of course, we'll get some tips and tricks more than likely. And then I'm happy to announce that on Wednesday of next week, my father, Carl Swenlin, will be in to talk with us about his thoughts as far as the intermediate and longer terms. So I think that will be very interesting. And what are we covering today? Or as you say, Greg, covering off? Well, we have Bruce Fraser here for our first segment after the technical news. 10 and 10 to 1, our first symbol is going to be Mosaic Company, MOS. And finally, we're going to finish with a new segment we're calling Buying Bases. And really, this is really appropriate right now. I think you even mentioned it just a little bit earlier, Greg. So we'll have some really interesting stocks and such to show you there, and how to find good bases for stocks and where we're looking for the breakouts. So should be a great show. And with that, Greg, I'm going to turn it back over to you for our technical news.
Okay. So what I want to show today is when you think the market is basing or when you think the market is topping, maybe some clues that you can use to help you with your analysis. And one of the things about when a market is, let's talk the indexes, when the indexes are basing or are trying to rally from a low, it's never straight up. It's always a bit of a wobble, and you're trying to get signals that can help you. And so some of these are in the book that I wrote, Stock Charts for Dummies. But I think in general, it's just such a good time to analyze it. And the point I want to make is I keep a screen over on the left, and rather than having a horizontal monitor, I've turned it vertical. And I put all of these on the same chart, and it's 2 weeks of data on 60-minute candles. And so here's the VIX, and this line in here on all of these charts is the 100-period moving average. And so you can see here that the VIX is breaking below the 100-period moving average. Now, is that significant or not? I'll show you in just a sec. But I've basically put a 100-period moving average on all of these, and you can see that the S&P 500 is moving above it. The MACD for the S&P 500 has made a higher low, even though price made a lower low, so we have positive divergence. And it's breaking out to above zero, so it's going positive. The NASDAQ composite is trying to push to new 1-week highs. The Russell has pushed to new 1-week highs. The TSX is about to try and get up there, so we're going to be at 8-day highs here if it can get just a little bit more meat. And nat gas on Thursdays, you'll normally get a gap from the inventory data. So we have that down this morning, and the same thing on oil. But oil's, let's call it trading unchanged. Gold is breaking down below its 100-period moving average, and you can see nat gas has a down-sloping one and just broke back below it. USO has an upsloping one, but has been gently making lower highs and lower lows. And here's TLT over 5 days, and it's just pushing below the 100-period moving average. And again, this isn't any magic. You could pick 50 or 80 or 120, just something that you're comfortable with. And if you look at UUP, it's making new 2-week highs. So one of the options we can do now that we've got that displayed like that is we can just roll this out to 3 months. And the reason I want to do that is because that's going to show us when the new highs, or when we topped and we went below the 100-period moving average. As the market started to correct, it was really, really low. And then we made a higher low on the momentum and a lower low in price. The VIX made a lower high. And then it broke down below this 100-period moving average. And again, the market tried to rally. It spent almost a week just trading sideways and then took off to the upside. The VIX started to increase again. The market started to fail. And this 100-period moving average just does a pretty good job of identifying. All of a sudden, in this case, it's breaking down below it again, and the VIX starts to rise, and now the VIX is starting to fall. So there's no guarantee that we're not going to go through a period of a week where we just chop around. We don't know that. But I will say we've double tested the previous low, and I like that. The momentum on this series of lows didn't get as low as, or was lower than this series. So even though we came down to the same price levels, we had a lot less selling momentum. And so there's a lot of things that make the market look like it's set up here. So as soon as I start to see higher highs on the MACD, I'm getting pretty interested. And then if we look at the NASDAQ, it hasn't quite got back above here yet. The Russell already has. And again, the NASDAQ's been hit. I think everybody's heard the stories, but the top 3 stocks in the NASDAQ make up the same market cap as the entire Russell 2000. So it's just so big that until those 3 stocks start to move, this isn't going to move. And then the Russell, here you can start to see we're starting to break out to new, pretty close to 2-week highs. And the TSX, it really hasn't been under the selling pressure that the other markets have had, and we came down to the same sort of levels. But lately, it's actually been just grinding sideways as opposed to these wild swings that have been going on. It's been relatively tame. Natural gas, just can't get a heartbeat. There's no flame there at all. And USO has a gentle uptrend going, but again, it's been trending lower for the last 2 weeks. So now we're stuck here on USO, and we really don't know what to do. So I'm going to talk about that in a little bit. Gold, I keep trying to make this trade. This trade doesn't want to work. And so it started to move up, and now it's starting to make lower highs and lower lows, and it's just testing, making new 2-week lows here. So again, once it starts to fail here, and I really thought if there was an opportunity yesterday on the big down spike in the morning yesterday, if gold didn't respond to that, we should probably just exit this trade because it hasn't been working. So yesterday sold my gold stuff and I bought a whole bunch of other stocks, but I'm not I'm going to have to let the gold trade rebuild. Now the bond market is important here because it keeps holding on this 100-period moving average, and the real question is, if bond prices, which is TLT, if bond prices are rising, that may or may not indicate a market top. The one thing about the bond market is it can do its own thing for months without the equity market showing up. And a good example here would be that the bond markets were selling off and off and off, and all the way through here, and you look, and the S&P 500 had topped almost a month earlier before the bond market started to rally. So the bond market wasn't any clue as to when the top was in on the equity market. But I will say that the big change that's happening here is the US, or UUP, the US dollar, is very close to making a new 3-month high. And I think for everybody who's thinking the US dollar is in a bear market, that would be news. But we're literally, 0.1 away from getting to new 3-month highs. So all of these things, just by having a 60-minute chart running on the side, you can get a very quick template of the market. And what I like particularly, this is the top 3. And so if you can't display them all, then just, you probably just want to be aware of something like a 100-period moving average on a 60-minute chart and just watch the price exit. So you can see that we broke this downtrend yesterday, and as soon as we broke it, it was basically, a vertical move of 2660 to 2600 to 2670. So we're up 70 points since it's broken through there. That used to be a couple of weeks, and now we're doing it in a couple of hours. So when the market gets volatile like this, being in near the lows can be very, very helpful. So a couple of things that we talked about yesterday, and I just want to go through those again today. Gold, or we didn't talk about gold yesterday, but as you can see, gold pretty much moves opposite. So this is gold and this is the US dollar, and the US dollar is shot up, and gold hasn't quite broken down here yet. But I think if the US dollar starts to make 3-month highs, this gold trade's going to get very difficult. So just be cautious on that. So here's a simple method for oil, and the oil stocks are moving today. The energy was the number one thing that Erin pointed out. And so here you have USO above its 50-period moving average, and you have XOP above its 50-period moving average. And quite frankly, when XOP was below its 50-period moving average, there really wasn't much purpose in being involved in oil. You weren't making any money. This thing was just jogging sideways. And so now if it's going to start getting a little more robustness, then you can start to re-enter the trade. But back here, you can see, it stayed above the 50-period moving average all the way into January of 2018. So did oil. And it was a really nice place to be. And I think a lot of people had a good ride off the July lows. So now it looks like it's starting to try and turn back up again. I'm not that bullish on oil, and I just want to show you why. And I realize it's trying to break out to new highs and all that good stuff. But here we have just a 1.5-year chart. And when oil is making lower highs on the MACD, that's usually not a good place to be involved. And so what we've got here is we have a higher high in price, and we have a much lower high in momentum. And it doesn't mean to say that it can't turn back up here. But I would just say if it does fail at this previous high, be very, very cautious, because we have a lot less momentum on this stock, or on this ETF right now. So all the way through here, we had, coming out of that July low, we had higher highs, higher lows, higher highs, higher lows, a lower low, a lower low, a lower high, and now we started a little uptrend. But the real question is, do we have enough momentum, or is this just going to be a secondary rollover? So on a weekly chart, I don't want to hit that button. Let me just change it over here. So on a weekly chart, what we have now is we have a little bit of tapering in the MACD momentum while price is at the previous high. And it's just a place to be cautious. It could work out like it did back here where it just rolls over. It's also at a reasonably high level, so perhaps it's got a little more energy in it. But I'm just saying exercise some caution here because we have a lot less momentum on this recent high than we had on the previous high. And look how it came on a spike high and then has rolled over. So there's some concern there that things might not be well. And then, of course, lastly, we have this big major trend line that if this was to start breaking down, we'd want to be much more cautious. Okay, so I've got a few more minutes. The one thing I want to cover off, yesterday we had talked about a few stocks that were breaking below support. And Caterpillar was one of them. Let me just shorten the period on this chart. And one of the things I mentioned was when something breaks support, you want to watch and see if it will reverse. And so sure enough, this thing has literally gone from below and taken off now back to the upside, and it's broken the downtrend. Now, you know, it's never easy. It's never like, okay, great, it's just going to start running and off to the moon. We're still going to, the market's still trying to lower the volatility, and we've still got some stuff to shake out. But this MACD is starting to try and turn higher. The reversal candle was on higher volume. We came up, we didn't quite take out the previous day's high, but now we're at new 5-day highs. Tom DeMark did a bunch of work on 4-day highs, 7-day highs, and 11-day highs, 15-day highs. When you're getting new 2-week highs, which was my 10, that chart with all of those things that I monitor for the market, when you get new 11-day highs in something like the US dollar this morning, that's a really important clue of things to be watching. And so the one thing, you know, we're still only 5 days into this here, but if this starts to get, you know, above 152 or whatever, and that goes back to a couple of weeks, then you really want to be aware of the trend change. I still think it's a nice place to enter because if you're wrong, your stop is very close. But if you're right, this thing there's lots of room to the upside. Okay, so the other stocks we had were Deere. And it isn't quite as bullish, but still it did the same thing. It broke down and now it's trying to get up. It hasn't quite broken through the trend line. But we had Boeing, and remember all of that concern about China. It's broken the downtrend, so it broke through support, gave you a false breakout in the morning, came back in the afternoon, and today it's off to, you know, whatever 1-week highs, and wouldn't take much to get to new 2-week highs. So these are really good turning points, and I want people, so the news is gloomy, right? It's all China and everything else. And one of the reasons that I don't like using the economic indicators as much as maybe other investors do is Canada had positive 4% GDP for the first 6 months of last year. And I just want to put that up on a chart and show you what was happening to the stock market. Well, we had 4% GDP, which normally would be celebrated, right? This is when we had 4% GDP growth. And so the stock market doesn't necessarily follow GDP, and it doesn't necessarily follow some of these jobs. It might be more predictive than it is responsive to economic news. So I would just say that, you know, we have a horizontal level in here. I think what's happening now is we've had all of this NAFTA debate, which kind of caused this. I think most people are thinking there will be a NAFTA agreement reached next week. I don't think anybody knows what that means, but obviously it's better if we have trade relationships with the largest neighbors. So when the stock market starts, when the volatility picks up, it's really important to look at previous support and what happens, and look at this candle right here. This was like huge down push just below support and then took right off, and it went up almost 10 days straight. Now, You would say, yeah, but I don't just trade for 10 days. Well, this move here was 14.8 to 15.8. It wasn't quite 10%, but it was a 7% move in 2 weeks. And so when the market adds volatility, you can make a year's earnings in a couple of weeks or a month. So as much as you'd like to own it for years, if you're going to get those big moves very, very quickly and make some serious money, and this wasn't a bad example either, where it just came up. This was a pretty smooth curve to be invested on. Trying to find those lows is important. And in this particular case, we're sitting right here at the 15,000 level. And, it's a really important level of support for the Canadian market. It's starting to bounce off. It's up 300 points already in a couple of days. We're seeing it on the US side and all of those other indicators. Now, again, it won't necessarily be smooth, but it's a good place to look for a market reversal. And with that, I'm going to hand it over to Bruce and let Bruce walk you through some Wyckoff bases.
Yes,
Okay.
excellent. There he is.
I'm here.
Well, as everybody knows, Bruce is our resident Wyckoffian. You've been blogging for us for quite some time, and I know you've been on the show quite a bit previously, and we always have such an interest in the Wyckoffian analysis process. So I know everybody's very excited to listen to you, so I will let you get started.
Well, terrific. It's great to be here. And so I'm going to, can everybody see my screen there?
There you are.
All right. Well, thank you so much. And the first thing I have to say, besides hi to Erin and Greg, is Greg, I love your book. And I take it with me, Stock Charts for Dummies. I take it with me wherever I go. And I like, one thing that occurred to me is that, really good books, all the pages are dog-eared. You go, oh, that's really good. And then you fold over the page and then you put Post-it notes on the other pages. And then the other thing I noticed is, because I take it with me wherever I go, and like I'll be having lunch, I'll be sitting there having a sandwich, and I'll look down and here'll be, see, some people use highlighters, yellow highlighters to highlight stuff. Well, I use mustard. So I highlight the page with mustard or coffee.
On purpose, of course.
Absolutely. Well, you're always lingering on the pages that are the most interesting, right?
Sure.
So there's the high probability of getting a coffee stain on it. So anyway, I'm bringing this book with me to ChartCon so that I can show you my artwork, and I'm going to have you sign it. So,
well, that'll be great. Thank you for the compliment.
Well, it's anybody who uses stockcharts.com must have that book. So that's my view. Anyway, okay. Having said that, in the last couple of episodes when we were together, I talked about the concept of accumulation, concept of distribution. And these are periods when the large informed interests, which we call, it's somewhat of a fiction, but we call them the composite operator. And they are in a period of accumulation. They are quietly, stealthily building gigantic positions in the stocks that they want to own. And it shows up in the way that the stock is trading in the accumulation area. And so these are two examples here. This is the blog that you can go to get these schematics. I think everybody should print these. Every Wyckoffian should print these schematics and put them on your corkboard next to your desk and be referencing them. But now that we're changing gears a little bit today, we're going to talk about point and figure. And the thing about point and figure charting is that point and figure and the vertical bar charts go together in Wyckoff analysis. They are both necessary. You'll see when I write blogs, I tend to put both charts in the blog, doing the analysis of both of them together. And so, as we know, these are important points during the different phases. In this case, accumulation. Each of these phases has a different trading characteristic. there are different things going on from phase A to B to C to D and E. And so phase A stops the decline, and phase B is a wild trading range period where the CO, if they're so inclined, is accumulating shares. What happens is that they absorb the vast majority of the shares, producing a period in phase C where a final testing occurs. And that final testing results in a change of character where the stock or the market can just start to move out of that trading range area, that accumulation area. And really the phase C is the beginning of the new uptrend. Now, there's attributes of phase C and phase D that we look for in the way that the stock or the market is trading. When we turn to the point and figure charts, we're identifying those points. We label them on the vertical chart, but we identify them from the vertical onto the point and figure chart. And then we take a horizontal point and figure count. And that gives us this incredible magic thing, which is a price objective. And there's just no other technique that I've ever seen that was so good at being able to say, okay, here's the size of this base, this accumulation, or this is the size of this distribution. And the result of that is going to produce a move of a certain magnitude. And so here, today we're going to introduce this. So let's see if I can, oh, my screen appears to be, there we go. Now, we don't have time. Point and figure is so different in construction from vertical charting, vertical bar charting, that it's like riding a bicycle is the best way I can describe it. The first number of times you get on the bicycle, it's very awkward, and it just doesn't seem like you're ever going to get your balance. You're ever going to be able to ride this thing. Point and figure charting is sort of like that. It's just different because the X's and O's, the ups and downs of the price movement, are a function of volatility, not of time. So when you look at the X-axis across the bottom of a point and figure chart, the time varies because it's a function of volatility. And so in a one box reversal method, you have to have a price move of 1 unit, whatever the scale is, 1 unit up or 1 unit down, to be able to produce a change into the next column. 3 box reversal method means that you have to have a movement of 3 columns. So let's say you go up 6 or 7 columns, so 6 or 7 X's you go up, or dots, and then you would have to have 3 full units of decline in a 3 box reversal method to then be able to go over and start to go down again. So it's purely a function of a predefined volatility that determines when you move from column to column to column. And so this is it takes a little time to get sort of used to this, but what it does is it allows us, because we know that stocks change hands as a function of volatility. That's the whole concept of Wyckoff, is when you're in accumulation and you have all this volatility and prices are really going nowhere, they're just bound between support and resistance, stock is changing hands. And if it's intelligent accumulation, it means it's going from weak hands to strong hands. And strong hands means that the stock has been absorbed, the strong hands own it, and they're going to hold that stock for a long time, maybe years. And that creates shortages of stock. Absorption means that when you get to the end of the accumulation phase, that there's very little stock left to buy. It's all been absorbed by strong hands. They have no intention of selling it. And it's going to take much higher prices to induce them to begin selling any of their stock. And so this is the logic behind all of Wyckoff. So now, here, this is the count guide. I'm going to go through the count guide today as we sort of summarize these concepts, but I'm going to provide these slides to Erin and Greg, and then they can post them up and you can read these. The idea here with this slide is, and this again is in Hank's book, 3 Skills of Top Trading. All of this is in Hank's book, is that we combine the use of the vertical chart with the use of the point and figure chart. We line them up and identify the key points along the way to get an objective. And you can see here that this base produces an objective because of the counting method or technique. And this counting method, then we flag it and it gives us an objective, and you can see it's a range. And in this particular case, I believe this is Merrill Lynch stock, is that it rallied up to this objective, which may be the final objective. It may be part of a bigger objective. So here, we talked about this last time. This is the distribution schematic. This is one of them. Go to this blog to get those, and I would print those up and put those on your corkboard also. And so we didn't actually talk about this schematic last time. We talked about schematic number 1, but they're pretty much the same. But again, we look for these key points and we count across. In point figure, we count from the last point of supply, LPSY, in phase D. We count over from right to left, and we count over to the buying climax or to preliminary supply. And we look for those points on the vertical chart, we count across, and that's how we take our counts. So let's look at an example. So here is Overstock. Overstock, you can see, has a similar resemblance to this schematic here. So we can see there's 2 LPSYs, 3 LPSYs, an upthrust, a buying climax, and preliminary supply. It's very, very similar. And so we can see that distribution is occurring. There's this beautiful uptrend. The uptrend finally fails. We get a sign of weakness, which is a really sharp, deep decline inside of a trading range, which usually produces some kind of a rally. And we notice that this rally from the sign of weakness up to the LPSY is, using a technical term, punky. It's not very good. And so volume typically declines as it goes up. There's a lot of overlap in the trading. There's interspersed with some important down days, and volume can show up, and it can't get back up to resistance. So we're going to look for these points on the point and figure chart, which is over here to the right, and we're going to count from right to left. And so we can see that the preliminary supply point goes up to around $65. Well, so this is preliminary supply here. Here's the buying climax. Here's the upthrust. Here's the LPSYs. And so we're going to count from the LPSY over. Now, there's a few different counts we can take. Also, in the course of the decline, there's a pause, and we call this a redistribution. And so this is interesting. And so this redistribution, let's count. Let's go. Okay, so here's this big count. And this count, we count from right to left. We have 15 columns. This is a 3-box reversal method. Each one of these, the price scale is 1 point, which is traditional scaling. Anything under $100 is 1 point. Over $100 is 2 points. So we count this 15 columns. So 15 times the reversal method, which is 3, which is 45, times 1, which is the scale. So we count down 45, and we get a count here that takes us, we take 2 counts from the count line, which is the place at which the breakdown occurs. So we can see it's hard to see, but right there at $80 is where the last rally, the last point of supply, it rallies up there and fails. That's the definition of the last point of supply. And so it goes 280 and then fails. So we count from 80 and we count from 89. This gives us a count. Subtracting 45 from those, gives us a count of 44 to 35. And so notice this. Notice that this is right where overstock went to. It's gone, and this chart is current as of a day or two ago, and we can see that it went right to that place. Now we count the redistribution here, and we count across at 63. We count from the count line and from the high, and notice that this count matches this count. And so these two counts, they are reconfirming counts. This is a really good thing. This happens a lot in point and figure, where the distribution count and the redistribution count roughly match each other. And this gives us confirmation. It can be somewhat of a timing tool. And so we see that both of these, this low is nesting at both these counts. And it's we're going to see now whether or not overstock can find a low in here and try to either trace out another distribution or possibly a base for a move up. So it's still too early to tell, but I suspect that this is some kind of a climax here. Okay. And here is adding a third count, which we took from here over to the high. And this is more of a trading count. And this third count, so we're always trying to be somewhat conservative in our counting. And so we see here, it's the same count line at $80, but we're taking a smaller area. And notice this, we always want to take these because this can help us with intermediate term important key lows and highs. Notice this, it almost went exactly to the lower count in this range at the beginning of the redistribution. So that would have been an excellent point for someone who is campaigning the stock from the short side to take off some portion of their short, maybe all of it. So, and that's for people that are inclined to short. Okay, so here is another case study. Again, this is a distribution. I'm going to go a little quicker through this because I have plenty of examples. You can see here, last point of supply. We have an up thrust that throws over the buying climax, which is where we draw the resistance line. We draw resistance at the buying climax, and we draw support at the automatic reaction. And we can see this has sort of a family resemblance actually to Facebook, which I think we did last time we were on. And so we want to count now from the LPSY to the buying climax and see what kind of a count we get. And so the other thing here is there's a very long trend channel. This goes all the way back to the kind of the beginning of the uptrend. And we have this drawn on our chart. And you can see that it's got to get to 145 to even get to the bottom of its channel. So, and that would still define it as being in an important uptrend. But we can see very high volatility from the last point of supply down to the support level, which it's approaching. This may produce an attempt to rally. Maybe it goes through the support level and then rallies. We'll have to see. But let's look at the next chart. Now what I've done is I've taken a count of the accumulation area. And this is one of the things that, so I'm kind of adding another idea here. And that is, this is a very large 3-box reversal count that produces 41 columns of accumulation. 41 times 3 times 1, which is the scale, and it gives us a count of 178 to 197. And notice this is exactly where where Alibaba hit the wall. This is where the climax clocked in. So when we have a count, and then now what we do is we look for the characteristics of stopping action in our vertical chart. And the stopping action would be some kind of a climactic action. And we can see here that we have a series of climaxes, and notice the change of character. Notice the volatility start to come in that didn't really exist in the uptrend. Volatility is starting to come in and it's losing its upward momentum. The thrusts are deteriorating, and here we actually get a lower high. And so this leads us to the idea that this could potentially be one of two things. It's either reaccumulation for another move up, or it's distribution for some kind of a corrective action. And so this count gives us more confidence that the trend for the time being is exhausted. So this is an important part of point and figure analysis, is to combine this counting technique with the vertical chart analysis that would, when we bring them together, it makes the whole method much, much stronger. So this is the whole idea of combining the two methods together. Okay, and so now we have a count. Now, the thing is about Alibaba is that we don't necessarily have a completion of this pattern. And we're of the idea that this is distribution of some sort. But if it can now settle down and start to calm down late in this stage and start to show the ability to resist declining, which right now it's not showing. It's gone right down to the support area. But if it could have a good rally and then start to resist going down, this could be reaccumulation for another move up. But in the absence of that, we're assuming that this has distributional qualities, and so we're really on our toes. If we own Alibaba, we're starting to act in concert with the composite operator and reducing our holdings, because we believe this is what they're doing, and all we want to do is follow in their footsteps. So here we have a last point of supply. This is what we're labeling it as, and we're going to take two counts. We're going to count to the up thrust, because we want to have a conservative count, and we're counting to the buying climax. Now, what happens if we get a rally here, which is a rally of poor quality that takes us back up into the middle of the range and then it stalls out? Well, this count becomes bigger. So, and we don't know that yet. And so now we're just taking the count that we have. These are preliminary counts, and they could become larger, or this could be ultimately construed later on over here as acute reaccumulation, and we may take this count for an up count. But at this time, all roads seem to point towards distribution. So this first conservative count, which might be akin to the count that we just had with overstock, might take us down to this area, this 144, 146. And the larger count to the buying climax takes us down to 106, 108. And so we'll be watching this closely to see what happens now that we're at support. And so anyway, so there's an example of how we could use that. How are we doing for time? A little more time. So Shake Shack, this is real interesting. This is up to date. And Shake Shack has the attributes of accumulation. So we can see all the elements. We see a downtrend. We see a throw under of the trend channel, which produces a good rally after a selling climax. And so we have a selling climax, automatic rally, sets up a trading range. We have support, we have resistance, phase A. Phase B, remember how we talked about phase B as this volatile, wild period? Well, here's the awesome thing about phase B. All this volatility produces point and figure count. The counts, this is where counts happen. This is where stock changes hands. And phase B is where the typical investor trader gets discouraged. They become discouraged because the stock's not going anywhere, and they go, show me something that's acting better, that's going up. The CEO doesn't think like that. The CEO is accumulating shares that they can sell much later on at much higher prices. And so they have to do that. That's being that they're large, very well-informed, very capable institutions. They have to think that way. Okay, so finally you get to the last test of the lows, which we call the last point of support. And then a change of character. Well, notice the change of character from this last point of support up to the resistance area. The quality of that rally is completely different than anything that preceded it in the accumulation area. It goes up and out. We call this a sign of strength because at least temporarily it was able to get above the resistance area and stay there. And then it comes back down, but look what it does. It only comes back down to the midpoint of the range, and then it wants to go up again. So it's not out of the range yet. So I haven't seen today's trading. It's not out of the range, but it looks as though this could be a completion of accumulation potentially. We won't know till it jumps out, but this would begin phase E, which is the uptrend. So now we can take account from the last point of support over to the selling climax and get a count for a potential objective. Okay, so here I put the distribution count over here just so you could see it. And so this distribution count, which was 9 columns, 3-box reversal, 1-point scale, took us 29 to 24. The low of the selling climax, which was the low in the accumulation, touched 30. So it missed by 1, which we consider a hit. That's really good. So now we can see the elements here. And so now we've taken 2 counts. We've taken a count from the LPS, which was the low in phase C, over to the selling climax, and this gives us a count to 111. We don't have a range because the count line is also effectively the low. We could take this low, so we call it 110, 111. Here, this is the backup, and so we can see the backup to 37, and we count over to the selling climax. This gives us a count 123 to 130. Now, what we say here is that this is the fuel that's in the tank. Now, I would take another count, and I would count this period from here, this area from here over to the secondary test for a trading count. So I would take this area, and I encourage you to do that. So, but I wanted to demonstrate the concepts of counting accumulation, but I would also take what we call segmented counts. I'd count to here, I'd count to here, I'd count to here. We can't tell how long it's going to take for the count to get up to this area, if it does, but we can often tell where it's going to stop along the way by segmenting the counts, because that's where the pauses occur and where reaccumulation occurs. So I'm going to go really quickly now. I've only got a couple minutes. Nike, this is a reaccumulation, big uptrend. 2016, 2017, just a big trading range market. We can see the elements here of reaccumulation. So we take this count. This count, we segmented it into two points, 11 columns and 17. This gave us a count 82 to 84 and 100 to 102. And so currently we're just hovering around 70. We've just jumped above the resistance of the prior peak. So there's Tesla is a distribution idea, which we won't get into. This is Detect Rotation. This is a blog I wrote recently, and you can, and Greg was talking about crude. Here's a chart of crude accumulation potentially, and here's a point and figure chart, so you can look at that. Facebook we talked about. This is in the blog from March 4th. This is distribution. So we wrote a blog March 4th and said, oh, Facebook's appears to be in distribution, and it's down at a key uptrend line. Should attempt to rally, but this is a lower high, change of character. And so then this is what happened. So we can see that it did in fact rally here, rallied up to the prior, what we called LPSY, and then that's where the trouble started. So we can see here. So now what we want to know, I put this in the last blog, so we want to know how far down can Facebook go. So we turn to our trusty point figure chart. We take a count. The smaller count produces a 120, 128 area. The larger count produces a 96, 104 area. And so it could get to either of these counts. I suspect that after breaking support, it's going to attempt to rally pretty soon, and we'll see what happens. But it could take a long time, but it could ultimately go to that 120, 128 area, or possibly even lower. We do a Wyckoff market discussion on Wednesdays, Ramon Bogomazov and I, and if you're interested in getting deeply into this, into the current market, you can join us, and this is where you would go to look at more about what we do there. Am I done? Am I out of time?
Bruce, you can always have as much time as you'd like.
Oh, sweet. I'm now, there's so much we could cover. We do 15 weeks in graduate school on point and figure, if you can imagine that, and we use all the time. So this, I'm going really fast, but I really want to introduce this. This is a very cool concept. I will just introduce this. This is 5-minute data, one box reversal, and we're using a different scaling technique that stockcharts.com has, which StockCharts has the best point and figure engine imaginable. I absolutely love it. And in my mind, it's the single reason to have a subscription to stockcharts.com is this phenomenal point and figure engine. But that's just me. I know it does all kinds of other stuff, which it does really well, but this is great stuff. This is 5-minute data. This is really the month of January. And this is the Dow Industrials, and you could do this with the S&P or others, but look at the distribution that occurs in the month of January before the breakdown in the market. And so we got to count. Now, here's the thing. We got to count. Probably could have extended it maybe a little further, but this is it. It went from, the count line was, call it 26,289. It went down to 24,831, 24,549. And of course, we know it went lower than that. But the point being that we got a really valuable intraday count from this that said that prices had a long way to go. And so we don't always get perfect counts from point and figure, but we get good messages. And this message was, this is distributional. So, and then the last thing is this is a blog that I did about a week and a half ago. And this is the S&P. I will put these charts up for you so that you can have them. This is adding the information that's occurred since. And we made the case that we're near support. We should find support here. Probably have to go into the new quarter before we can get a good low and then turn up. Well, this area here, look at how it bogged down around support. That's very bullish. And so then what I did here is I took an intraday chart. This is a 30-minute of this area we just looked at. And we can see the elements of accumulation. Well, now we want to ask the question. Now, this may not be done. It may have to go up to above resistance and then come back down one more time, making this count even bigger. But the thing we always ask is, what's the count? It's like, you know, this looks good. Let's count this, you know, and so point figure is addictive. It's, you know, we look at it and we go, oh, I want to count that. So, and here's the distribution. Well, look what happens. It did a wonderful job of splitting the difference on this, coming right into the midpoint of the target from this distribution count using, this is 10-minute data, ATR scaling, and it gave us a really good count down to support. And then we now have taken this count, which could become larger. And this count here, counts form quickly. This count takes us up to 2853, 2870. And so this is we can use this technique on an intraday basis to do our swing trading or intermediate term trading. And these tools work just as well on the intraday time frame as they do a daily, weekly. So on that, I'm going to quit. So
well, it was excellent presentation. I don't know if you're going to be able to lurk in the chat room, but there are a lot of questions that have come up. A lot of it having to do with whether you have some scans on stock charts that are available. So I would, if you can't get into the chat room and hang out there, just be sure and send me your charts, and I can get those up in the blog, and I will forward you questions that we have.
Wonderful. Thank you so much.
Oh, thank you. It's been great.
And I'll be here if you need me. So
excellent. And I do want to mention that Bruce is going to be with us at ChartCon. Are you going to be on the cruise afterwards as well?
I'm going to be on the cruise.
Woo! Okay.
I can't wait. Yeah.
Yes, I know.
ChartCon is a blast. Everybody should go to ChartCon.
Absolutely. If you can go as a VIP, that's great. If you can't, we do offer the online way to be in the audience and enjoy the conference. And we do have social media, opportunities there. So even if you can't come in person, going online, being online with us live, we will definitely include you through the presentation. So highly recommend check it out.
My topic is going to be on where to begin entering and campaigning these formations, where to put trades on and where to put stops, so that the stops are not likely to get hit, and you can take full advantage of the emerging uptrend.
Yeah, absolutely.
Yeah, so that's going to be my topic. So
I can imagine on that cruise ship that the coffee bar is going to have charts all over.
Oh, I know. Isn't it going to be great?
Well, I'm just like Tom. I go down to Starbucks and I sit there with a cup of coffee and I write my blog and I do my chart markups and everything. It seems like I do all my work down there.
It'll be fun. It'll be a real charts nest. So
yes, a charts nest.
Funny.
All right. Well, thank you again, Bruce, for being here. We're going to go hop into that 10 and 10 to 1. And I will go very fast, Greg, I promise.
Okay, well, fire it up with Mosaic.
All right, there we go. And of course, I already got us started on this one. Again, 10 and 10 to 1, mainly showing you how quickly you can annotate charts and save them to a chart list. But I'll throw a little bit of my own analysis in there very quickly. But Mosaic, one of the ones we've seen break out today, looks great. It was in a declining trend channel, but we got the breakout from that, and notice it comes on some very nice, it broke that overhead resistance area, and you can see we're also now trading above the 200-day. PMO looks great, so I'm pretty happy with this chart. I think this one has some great potential.
Excellent. We're going to go with Bank of America.
All right.
So lots of people want to know about this one today.
Yes. Okay. Popular one. It's another great setup. And I think we're seeing that across many of the stocks out there where we got these double bottoms setting up. We got the test of that very important support. I will go ahead and put some of that in here. So you can see really important support. We came off of it. And again, you can see if you were to draw a trend line, let's make it a little thin here, just in the very short term. Get that arrow off of there. And you can see that really nice breakout. And then when you go into the thumbnail, you can also see the gap up, which could very well end up being a breakaway gap. Especially when I see this oversold PMO turning up, looking good. And we already had a pretty strong scooter, so I think that was a good setup as well. So let me go ahead and save that one. All righty.
Okay, so Micron, MU, was downgraded this morning and put fear into the semiconductor space today.
Apparently so. I honestly, I have to say, looking at these charts, I think there's so many better places to be right now that have these breakouts that we're looking at. I think if you were holding on to Micron, and I'll say that I do have it in my long-term investment account, I wouldn't be getting too concerned here. I don't like the PMO sell signal and everything, but we got a little acceleration to the downside today with that. But ultimately, you're looking at a very strong, as far as the scooter in that space. I don't think I'd be bailing here. I think there's an opportunity probably to get this on a bounce. But again, I like the fact that there are so many stocks out there right now that already have the breakouts. So I don't think that this maybe is the best place to go. Hunting at this, we don't have the actual breakout, but if I were holding it long, like I am, I wouldn't be getting too concerned here.
Okay, and then HACK, HACK, the ETF for cybersecurity.
Ah, yes. And I know Tom has been liking this area. And looking at this chart, I think he had a good reason to like it. All right, so I'm going to start with just drawing my circle around the fact that we have that PMO. Notice I'm going to make this more opaque, less opaque, I should say. And you've got that really nice rounded, that move on the PMO turning up. And then look at the fact that if you look at these bottoms here, and I'll go ahead and make that bigger and fatter, we're getting a confirmation here on this move. And I like to see that bullish confirmation. Again, another gap up. We could be looking at a nice breakaway gap. And you can see the rounded bottom as we were joking about earlier today. You can draw these parabolas very easily. Look at that. I love that tool. So we have the nice rounded bottom there. I like to see those, especially when we get the breakouts like we're seeing right here.
Yeah, I think I get the feeling that there's a bit of a turn going from the semis over into the cybersecurity, and I don't know if we'll have to watch a little bit more. But another one we're going to hunt down today is ICPT.
ICTT?
ICPT.
PT, of course. There we go. Pharmaceutical space. Okay. Oh, wow. Look at that beautiful breakout. Oh, my goodness. And the nice move on the scooter. So let me just go ahead and get that going first. Here's that breakout. I'm talking about the breakout here from this declining trend channel here, and I'll go ahead and mark that up there too. So I like the fact I'm seeing that kind of a breakout from off of, again, a rounded bottom. We have the PMO buy signal in place here. So let's see, I'll just do an arrow with that. And Scooter is making a nice move back into that really strong zone. I think that's also a good move. So, all righty. And
that stock's particularly interesting on a 5-year.
Oh, okay.
If you could just quickly show that.
I could probably do that in a weekly format, I'm thinking.
Sure.
Oh, yeah. Nice base here. Look at that PMO buy signal.
I'm thinking more about the ballistic move. So the ballistic back in 2014, they came out with a liver cancer, a treatment for liver, and it literally went $750 or $500 or something in one day, and then pulled back and then kind of rattled around. And one of the reasons to really be careful when you see a parabolic move is just, well, it's nice to get on. You really have to know how to trade them. And so that one traded lower highs, lower lows, lower highs, lower lows for years. And if you bought it on the promise of the liver information, you would still be holding that thing from 500 to 50. And so the important thing to remember on these is when you get those sudden moves, you really have to be aware of how to trade them, because they could not be long-term holdings. And the one thing that's also important here is that big giant downtrend. I think, just drawing a line across the tops, if that ever starts to break out, I think that's probably going to be your one of your better signals ever. So that's probably, something like that, anywhere in there. Yeah. But if you're starting to break that 3-year downtrend, I think there'd be some value there. Anyway, that one's an interesting one because I just remember the day it broke out.
All right, cool.
Okay. There are a few others that people were asking about, but Shopify is interesting, which is different than Spotify. Yeah.
Do we want the Canadian version?
Yeah, sure. Do the Canadian version. Just it's on both sides of the border, but this one is an online web application if anybody cares.
There we go. Okay. Interesting. It's, again, I think there's some better choices out there. Let's see here and get some, we got that break below this area of support that we saw earlier. But at the same time, if you draw a horizontal, let's do it this way. Just from this previous area. I don't want the arrow. There we go. So we did come down and very closely test this earlier low, and I think that's a positive, obviously. And now you're getting that breakout of what used to be pretty strong resistance. So even though we broke that support line, we're right back above it. Not really crazy about the PMO, but hello, you've had this kind of a decline. I would expect to see a PMO like that. I think it's probably nice to see this rise back in the scooter to come back to life. I would like to see a little bit more action out of the OBV though, because yeah, that's just not that impressive to me. So.
The one thing that's important while Erin's got that chart up is look at the scale on it, and you see that that's a double from the bottom to the top. So it's up 100% in 1 year, and you can see in 2 weeks it gave back 50%. So really, when you have those high volatility stocks or also high momentum, like one thing that doesn't really show here, but that's a $15 move from yesterday's low. So
Right.
there's a lot of money to be made in a few days on some of these. Whereas, if the scale on the right-hand side is going up in 50-cent increments, you can spend a long time trying to find $5.
That's
So
a good point.
Anyway, just be aware that the scale helps you a lot. And, something that's moved 100% might be worth a better shot than something that's moving $1 at a time on the right-hand scale.
Absolutely.
Okay. And then there's one called Cake. CAKE.
Cheesecake Factory, yum. Oh, nice breakout. And this is a nice area too. I was when I was looking at sectors and which ones were doing well, the cyclicals have managed to come back quite a bit here. So look at that nice little breakout there. And I'm gonna make this fat. And again, if you want to get a transparent line, make sure that when you go in and you're making I'll show you when we get there. Right here. So select one, select a color, and then start moving your, opacity right there, the transparency. And you can set up these that are not that bright or brightish, but what you want is to make sure you have one that's very light so that when you go in there to do your support resistance, that's how you can set that up. And if you want to just go the normal, just keep that. And I'm putting this in, I'm going to skinny it up a little bit, but that is some very interesting gap resistance here. And I would be looking for that gap to close, especially when you've got this really nice breakout. Look at the PMO, it's got a buy signal on it, the rising bottoms on the PMO. I think this is nicer as far as the OBV is concerned as well. And then that's the scooter. So this one looks pretty good. I would be a little bit concerned about the resistance level here at about $53, but based on this breakout here from that area, we're talking quite a while ago. Those early February tops here and late December. I think those look pretty good to get that breakout and then get the corresponding PMO signal. I think that's all really positive. I think that's number 7.
I think it was 8, but anyway, then we're going to go with Apache, APA.
Okay. There's a lot of interest in this one generally. All right. There we go. Oh, it's been already in a nice uptrend here. But today, that little breakout here, let's go ahead and we'll make these blue. I'll skinny it up a little and fix that. Okay. So this is what I'm going to look at here is this really nice rising trend. And of course, it came on right after that PMO buy signal. But what I'm also noting just in the very short term here is, an ascending type of a triangle here. And we got the breakout as expected. The next, I think, point of interest is where's our, I'm going to use the auto support resistance line. So let's get that in here. I want to make it fat and transparent. There we go. So I'm looking at this low. We've got the easy breakout there, but even if you bring it up here, we're getting that beautiful breakout. I like the setup. It'd be nice to have gotten in on this move before it really, broke out. But the fact we got that nice area of consolidation set up in that ascending triangle. Very positive, looks good. I think there's still more upside here.
Okay, we got one left, and I'm scanning the list, and there's just so many good ones. But how about Lam Research, which is LRCX?
Okay. And here we go. Not great. Again, you know, when you look at some of these, you know, you can get that immediate feel for the chart. And given what the charts we've already been looking at, I think you can agree there's certainly better areas to be in. Let's see, where does that line up with? It doesn't line up with much as way as support, but we are getting a bounce. But, you know, the momentum is not great. Again, not a surprise, I suppose, when you look at the fact we've been in this declining trend for so long. I think this might give us a little bit of hope here when I look in the thumbnail, and I'm going to annotate it, but I'm pretty sure the annotations don't come through on the thumbnail. But just to give you a picture here, I really like the fact that we're getting these tops now. You can see that move above that previous one. We haven't seen that for quite a while. So we're getting that move. You know, we got that breakout move on some decent volume. And right now we're pulling back. We'll have to see whether that will pull us back all the way to that area of, you know, previous support where, again, I guess you could use these tops as your support level. But mainly we're looking at that test of the intraday low yesterday. We'll have to see if it can.
And the other, I mean, on Bruce's discussion of distribution, that looks very typical. And look at the scooter ranking, how it's changing. It used to be just tagged at the top at 99.9, and now it's losing its strength over the last 3 or 4 months where it just can't maintain top performance. So the momentum has clearly changed in the stock from, you know, a $100 uptrend in 6 months to sideways for 6 months or 5 months here. So I think, you know, just seeing that scooter start to break down like that for me would be, I gotta go.
Yeah. Again, there's just so many better places to be, I would say, at this point.
And so many nice bases. And by the way, tomorrow I'll be covering off some Keltner channel stuff, which I think you'll find really exciting. But when the market does this big dip, most people hate it. But the actual nice part is things like Keltner channels and moving average envelopes and all those kind of things work out really well. So.
All right. Okay, well, that concludes the 10 and 10. And I think we've got the symbols right here for you. And they are already up in the Market Watchers Live chart list. I'll probably fix the numbering and make it a little bit better, but you can find those already in the Market Watchers Live chart list. Go to the Market Watchers Live blog, and the link to the chart list is right there at the top. So that's where you'll find them. And with that, I'm going to do a very quick market update because I know we have some really interesting stocks to look at for buying bases. And I want us to both have some decent amount of time to go do that. So let's go and do a very quick recheck of what's going on in the candle glance that I showed you earlier. All right, so we can see that, you know, the markets had been rising. We're now starting to see a little bit of a consolidation right now. I think it's interesting, you know, the NASDAQ technology has been on a nice rising trend. Today it was up, but it's really just consolidating sideways, not anything overly exciting there. Russell 2000, we're seeing small caps also pull back just slightly, but are still up for the day. IJH, the mid caps, very similar situation. Looks like it might try and go back up to test some of those intraday highs. TSX making new intraday highs as we go along, and we can see Treasury yields are up. We've got a reading of, let's see, 28.27. UUP is gapped up and is, you know, it pulled back, but it looks like it's going to come back up to test some of those intraday highs. Currently, UUP reading at 23.72. Gold gapped down and has been really trading mostly sideways at this point. Current reading on GLD 125.77. The VIX is lower on the day. We're looking at a reading right now of about 19.4, which is definitely not elevated when you compare. We were already at the 24 level yesterday, but we have pulled way back and continued that pullback from yesterday afternoon. XLE Energy still doing very well in that space, getting ready to set some more intraday highs. We'll have to see if that can hold. And we have oil exploration where we're seeing that pulling back a little bit at this point, but still looking pretty good on the day with being up quite a bit. And that's all I'm going to cover off on the market update. And Greg, I think I know we do sometimes, like if you had something to add, but I don't know about you, but I'd really like to get into the buying basis segment.
Sure.
So would you like to go first, or shall
I could do that. One of the things that that happens when you get this market pullback is you're looking for a couple of things. One is you're either looking for a stock that has recently made a new high, and so that chart of Apache right there was particularly interesting. And the reason for that is all of a sudden the stock's been basing for 2 months. Remember, the market's been doing the opposite, right? It had a low right down here just yesterday or 3 days ago. And so this thing's just been climbing out of the hole. So you like to see relative strength. So that's important. The second component that you're looking for is coming out of some sort of base. And I'm going to use something like CCJ. And the reason I just want to point that out is, Bruce has just spent a whole bunch of time talking to us about distribution and accumulation. And this chart is the world's largest uranium producer. So needless to say, it's been a bit out of fashion since Fukushima, and these charts have really been hit hard. But about a year ago, and I have a chart that I noted right on it, right in here, Cameco said it was now going to restrict uranium supply to the world. And it's taken a year for that to matter, but all of a sudden it's starting to break out. So you start to see stuff moving to new 3-month highs or 6-month highs or 9-month highs, and you can do very simple scans. So one of the I don't want to make this a scanning episode, but one of the things that is really simple is just going to advanced scan, and what you're going to look for is a monthly breakout. And what that does is this looks simply for this month's high is greater than last month's max. So it's looking for any intraday high this month that was a new high. And so, and if I change this to whatever, 5 trading days ago, I'd get it for the whole month of March. And we talked about that earlier in the week. But the benefit of just running a simple scan like this, and you can just screenshot that, or Erin can post that in the blog today. But, just running that simple scan, and it's going to give you a list of stocks. There's 55 that have already made new highs this month. Well, the market's been, 10% down. So something's going on that these stocks are starting to break out. And of course, you can hover over, once you put them in a chart list, you can hover over these, but just, whatever, picking Crocs or something. This thing's just been going ballistic. And, that's a really nice, strong move on that stock. Now we can, rather than getting into each one of these, here's Callaway Golf. Okay, all of a sudden Tiger Woods is back on the field and everybody wants to buy golf-related items. I think they're expecting some of the highest viewership this week, and it's just because one guy is showing up for work, and Nike was on that on a breakout to new highs. So you get these stocks that have been consolidating sideways while the market was pulling back, and this stock's actually, clearly right near the highs and ready to break out. So those kinds of setups are what you're looking for. And again, it could be, Nike might need to get above this 70.04 to actually hit that 1-month scan. But you can, there's so many things you can look at in terms of relative strength. Let me just change this with a button, and then you'll see it separately. Here's Nike with relative strength, and it's at its new 18-month highs in relative strength. So you can scan for something that's doing that, and we'll get into some of that tomorrow. But I think the important thing when you're looking for stocks to start turning up, Erin has a PMO scan that's starting to turn up. This one's particularly nice because it's turning up right above zero and heading on to new highs. And again, we have all of these different tools in stock charts that you can use, and whether it's the a simple monthly scan, just show me what's hitting new highs right now, because if they're hitting new highs when the market's down 10%, they must have some serious relative strength. And it's that kind of information that really helps us find the new one. So on these pullbacks, it's really a big opportunity to get them. And when you get a gift like Nike at 18-month relative strength highs, so let me explain what that means. So normally when a stock is pulling back, we'll just take the 5-year version of Nike. When the stock is pulling back, I'm going to add the relative strength line here. So the way you get relative strength is you have to compare something to something. So you always put the ticker symbol first, and then you compare it to the S&P 500. Above or below is fine. I usually do an area chart, and then I color it purple, and then the height's fine. Opacity comes off really strong, so I don't like it. And then I usually put a moving average to get a crisp edge on top, and you type 1 colon purple, and that's going to give you a thin edge on the top. But the idea behind relative strength is you can see Nike was really, really outperforming, and then here it starts to make new 6-month lows in relative strength. Well, the stock ends up giving back 30% or something over the next year. Now we have exactly the opposite. Nike's now returning to new relative strength highs, 1-year relative strength. If you're a momentum investor, you're now looking for things that are outperforming the S&P 500, stuff that's making new 3-month relative strength highs or 12-month relative strength highs. And all of this is in the Stock Charts for Dummies book. But those are really simple things to look for on your chart. So you're looking for a stock making a new high while the market's pulled back. It obviously has relative strength at that point. But finding stuff that's at new 3-month highs, 6-month highs, or 12-month highs is going to give you some really nice places to look on the chart. And with that, I'll hand it over to Erin so she can go through some of her ideas.
Yes. So one of the things we were talking about is right now, the home screen is actually very rich with opportunity in finding some of these breakout stocks. So I was just going to show you how I like to do it. And I think, am I in? Yes, I'm in Safari because I want my candle glance to be working properly. And I think I did show some of this when we were looking at scooter movers yesterday. So I'm just going to pull up the top 10 NYSE. You can see we can go, if we want, by most active. I'm actually going to see which ones are the big movers right now and see what is available to me as far as which ones are just going crazy here. What kind of breakouts are we looking at? Are there any opportunities sitting in here? Right now, I'm looking at this chart, immediately caught my eye. We've got the PMO buy signal coming in, a nice breakout from this declining tops trend line. You can see similar setup, declining tops trend line broken. We're getting above the 20-day EMA, in fact. Look at that beautiful oversold PMO, and it's rising. So these are some ways, you can find, if you don't want to run a scan or you don't have the ability to run, for example, one of my PMO scans, this is a way you could very quickly do it. And remember, if you want to see the PMO in your candle glance, you need to set up your candle glance setup. What you want to see when you do your candle glance. And it's very easy. You set it up the way you want it, and then you name it candle glance. So I set up my candle glance. This is the way I want it to look. And so, very easy, set it up and then save it as candle glance. So that's how we do that. But let's get back to the member dashboard. So I'm going to go ahead and let's take a peek at the S&P 500, which ones are moving the most here. And again, I'm going to take candle glance. And I want to look for new breakouts. And, here's one right here, the Marathon Oil. And I know we're talking about a lot of these energy stocks, but that's where the strength is. We already got the PMO buy signal. Didn't really result in much. And you can see in the thumbnail, this, I think, was really the information you needed to know. Notice the PMO is just heading almost straight up here, even though when I look at this, I think of it as more of a declining trend or at best, a little bit of sideways consolidation. And we see that the PMO was already showing we had enough momentum coming out right here. And so even though we had a bit of a declining trend here that was going on, we still saw that momentum moving up. So, you know, it's tough. Obviously, you're looking at this, it's already made a 5.6% move. And of course, that's what you're going to end up seeing if you're going to pull them out of the market movers like we're seeing here. So I think another way to do it, because a lot of times you're not going to, you might have some opportunity for finding, you know, stocks that maybe haven't made, you know, a huge giant move today, but you can go into your scooters and then you can choose, do I want to look at small caps, mid caps? Let's look at the mid caps right now. And these are the ones that are moving the most via their scooter rank. So again, I'm just going to pull up Candle Glance. What do I see as far as my indicators are concerned? So right here, there's that nice breakaway gap. Haven't quite gotten over that area of overhead resistance, but if you were to draw a declining tops trend line, you know, you have just now broken out above that. Flat PMO, flat movement, maybe add that to a watch list, see if we do get a breakout on that, since we're getting such a nice move on the scooter. And, you know, again, looking here, there's a nice declining trend that has been broken. And we have that PMO turning back up and actually giving us a buy signal, a bullish confirmation, rising bottoms on the price, coordinating with the rising bottoms on the PMO. So these are just a few ways you can get in there and, you know, start finding some of these patterns, but just going straight off of, you know, the scooter rankings or your top 10. And that's a great way to find some of these. So here's the large cap scooter movers. And again, look at that nice turn on the PMO. Of course, I looked at Mosaic already. I told you already that I like it. CF Industries, I think this one is another very interesting move off of this declining trend. And again, we're seeing bottom on the PMO. It's starting to head back up. The only thing I would look at this and be a little concerned about, I suppose, would be the fact that these price bottoms are, you know, slightly rising, or at least at about the same level, yet you can see the bottoms on the PMO are not that way. So that might not be your best opportunity. But I think these are a great way to do it. You could also go into predefined scans, but we'll show you some more of this, obviously, on the show as we go along. But those are just some quick and dirty ways to do it.
I did want to cover off the poll results, and we have about 40% say you bet, 40% are stuck in neutral, and about 20% are too scared.
Excellent. So I think that's pretty interesting. You know, it's always hard because you come on here and it's, you know, if the market's doing great, it's very easy to get all bullish and you know, vice versa if we're having a terrible day. So I think it's interesting, you know, not quite half are on board with a multi-week rally right now, and so many are in the neutral camp. And I have to say, I'm still, you know, my toe's in the neutral camp and my other toe is in the you bet camp. So let's look at what we've got to come up this week. And you'll see Greg has got his workshop tomorrow on Keltner channels, everything stock charts on Tuesday. And then my father's going to be coming in on Wednesday as our special guest next week. So with that, Greg, it's been a great day. Bruce, I'm not sure if you're still out there, but it was great having you on the show as well.
Thank you so much.
Absolutely. No,
I had a blast.
Excellent. Well, you know, we're always going to have you back, probably at least once a month if we can get you. So with that, everybody, I want to thank all of you for being with us today. Please remember to complete that survey as you exit. You know, we really love to get your feedback, to hear what you think about Market Watchers Live. And honestly, I think we have it a little bit available there during Stock Charts TV as well. As a quick reminder, Market Watchers Live airs 5 days a week, Monday through Fridays from noon to 1:30 p.m. Have a great afternoon, everyone, and we'll see you back here tomorrow. Happy trading.